Welcome, you're watching Kaleidoscope Ceylinco Live News Capsule. This is Kaleidoscope Ceylinco Live News Capsule. Welcome. We have been seeing the rupee going up 22.9% this year up to May, inflation coming down to 25.2% this May from a high of nearly 70% in October last year. Fuel and gas prices reducing too. However, exports, which we have been depending on significantly, has seen a continuous drop since the beginning of the year. Although our remittances have improved and tourism too is bringing in some funds, although not as much as expected. On the Pethiyagoda Pages today, scientist, conservationist and public policy advocate Rohan Pethiyagoda on what's good and what's not. Rohan, Sri Lanka has been depending on exports to prop our foreign exchange reserves. Now, that's not looking too good right now. How do you see our export conundrum?
The export fall we've seen in the first 4 months of this year, about $130 million a month, has been largely due to the garment sector. And the garment sector is having problems because of two things. The rupee is strengthening on the one hand, making the exports more expensive. And on the other, we've got a kind of near recession in many Western markets, which has reduced consumer demand. So in that situation, I think we're going to find it difficult with exports going forward. Tourism is not doing nearly as well enough as we hoped. The instability that Sri Lanka had a reputation for this time last year still seems to be lingering in the minds of potential tourists. And so I think we need to have a diversified view of this. And even though apparel exports may fall for a while, I think we need to have a backup by way of tourism and workers' remittances from overseas, which also are doing quite well now.
So do you think we need to diversify our export basket?
Yes, obviously, but I don't think you can prescribe that because there are many things that prevent that from happening. First of all, we've got to have people investing in producing things that they can export. But most people who've got capital now have invested it in government securities because they're paying so well, 25-30% returns per year. So why would you want to risk starting a company to make something to export when you can get that return from government? So now that I think inflation is falling, just 20% now, and interest rates are on the way down, by the end of this year, we should see inflation down to 10% or thereabouts, and interest rates following in that trajectory. And then the incentive is there for people to invest their capital in actual organs of production, starting new industries and so on. The bigger problem, I think, is that the things that were working well for us, like agricultural production, are still suffering, and we haven't given enough attention to getting agricultural production back to where it was in 2020. And this is largely because of the fertilizer ban of Gotabaya Rajapaksa in mid-2021 and the agrochemicals ban. So the tea industry, for example, though prices have been buoyant, they are producing about 20% less tea than they were this time last year. That's really bad. So we need to really pay attention to production and not just exports per se.
And is there any good news in all this?
There's lots to be happy about. The central bank's reserve is now at $2.8 billion. Workers' remittances for the first 4 months of this year, $800 million more than last year. That's really good because there's more money coming in. The trade deficit is down by $1.5 billion this year. Excellent news again. And core inflation, as I've said, is down to 20% from the 60-70% that we saw last year. So we've got a lot to be grateful for. And I suspect that Ranil Wickremesinghe is going to capitalize on this good news, print a little money, make people happy, and go in for a presidential election sooner than you think.
If you like Kaleidoscope, subscribe and follow us on YouTube, Facebook, Instagram, and LinkedIn.